This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome to this week's exciting Value Investor Podcast. I get asked a lot about how to find good quality value stocks, and I already did a podcast on basically how to find value stocks. But this week, I'm going to provide the most basic and easiest screen you can do to find those value stocks. And I mean the basic of the basic. So this screen only has two criteria. Like I said, it's very basic. One of those is the Zacks rank, of course, because I want solid fundamentals, and rising earnings estimates is one of those solid fundamentals. So the Zacks rank, if you're searching for ones or twos, should give you nice rising earnings estimates. So hopefully something good is going on at a company that is having rising earning estimates. So I want to see that fundamental. And then the second criteria, and this is the value component of it, is the price to sales ratio. I know what you're thinking. Why not the PE? You could use PE, but I like to use price to sales because, as many of you know, earnings can be a little more easily manipulated by companies. It's like a pennies here. There's accounting issues there. It can be finagled a certain way. I'm not saying they're lying or anything like that, but it can be finessed certain accounting ways that sales are a lot harder to do. Now, you can mess with sales too, but you either have, the product is being shipped out, you're booking that revenue some way, or you're not. And if you're finagling it to the extreme, you might get a call from the SEC. So it's a little bit harder to mess around with sales. So that's why I like to use the price to sales. So what do you look for in the price to sales ratio? Well, remember, the price to sales ratio is the company's market cap divided by total sales over the past 12 months. And much like PE or the PEG, you don't have to figure all this out yourself if you're all confused or, what do I need to look at? Most of the financial sites do provide the price to sales ratio. So look around for that. And you want it to be low. So the lower it is, the cheaper the company. And what that really means is that Wall Street isn't really thinking highly about those sales if the price to sales ratio is low. It means that those sales are being undervalued by the street. So you want to look for a ratio that's under 1. That's usually what is considered to be a value. One other caveat about using like a super basic screen like this is that you really do have to drill down further into the fundamentals. So I ran the screen with a ones and twos and the price to sales ratio under 1 on Zacks.com on our basic screener on the site. And, it gave me quite a few number of companies. And obviously, you got to do further research to figure out which of those are the ones that you really want to be in, because if it's going to give you a couple dozen of them, that's not going to help you much. But this basic screen at least gives you a parameter of just cheap value stocks with a good Zacks rank, and then you can go from there. And another thing to be aware of is that some industries have just perpetually low price to sales ratios. So when you're getting the screen, you have to also do research into that area to see if it's just because it's in that certain sector or if it really is cheap. So one example of that is in the construction area. A lot of times they have price to sale ratios that are really low because it's how they do their accounting and account for their sales and everything. So there's some construction companies that have been showing up on my screen, as I would think so, with the low price to sales ratios that they usually have. But I do like that sector. So, be sure to drill down when you're looking at that. So I came up with 4 names that I like that have really low price to sales ratios. And then I looked at their other value fundamentals and also liked what I saw. So I'm going to give you a bunch of those right now because I'll do the work for you, basically. And the first one is Wal-Mart. It has a price to sales ratio of just 0.5. It's actually 0.47, but we'll round it up to 0.5. It's a Zacks rank number 2. They just reported earnings, and it was a good quarter, surprising. Their e-commerce, their global sales were up 11.8%, which everybody liked because they're trying to take it to Amazon now. They're paying the $3 billion to get Jet. They had good sales at their neighborhood markets because they closed a bunch of the non-performing ones, but those were up 6.5%, and same-store sales were at least in the green, up 1.6% domestically. They have had some issues with costs going up, however, because they're spending a lot on the e-commerce, and then they did boost wages in the U.S., but, analysts like what they see. It's Zacks number 2. Those estimates are rising. Their PE, actually interesting, is 16.8. So not quite as cheap as the price to sales. But overall, it's a good value stock here, and you're getting a dividend yield with that one too. The second one is also a retailer that's been down on its luck, and that's Macys. They also had a much better than expected earnings report this quarter. They have a similar price to sales ratio of 0.5. Their PE is actually a lot cheaper than Wal-Mart. They're trading at 11 times. They announced they were shutting down 100 stores, but they reaffirmed full year guidance, but still see same-store sales falling 3 to 4%. So they're not in the green, as you can say, like Walmart is. They're not seeing the growth there, but people, investors and analysts were very encouraged by the thought of them shutting down 100 stores and consolidating here. They're still upping their game on e-commerce. That's going fairly well. So there's some good situation going on at Macys. The estimates are going up. It's a Zacks rank 2 as well. Switching gears, we're going over to healthcare with United Health Group. They also reported price to sales ratio is 0.8. They have a little bit higher PE at about 18 times, but double-digit earnings growth is expected both this year and next year, unlike Walmart and Macys, which are not expected to do double digits. But United Health Group they actually raised the low end of their guidance range, so they narrowed that a bit. Their pharmacy business is actually doing really well. That Optum unit saw revenues up 51%. So healthcare, even with some of the trials and tribulations of Obamacare, is still a pretty good and interesting place to invest. Estimates are rising. It also is a Zacks rank number 2. And then the final stock is a little bit off the grid, I feel, that most people aren't as aware of. And it's Cisco, but not the tech company. It's the other Cisco, the one that's neglected. And that is spelled SYSCO versus the other company. They have a price to sales ratio of 0.6. So they're cheap on that metric. They do food products to the restaurant industry. So you always see the Cisco trucks outside of restaurants, and you probably haven't even noticed, but they're huge globally. So they are seeing a little bit of currency issues with the strong dollar, but double-digit earnings growth this year about 10% and next year about 12%. Their PE is a little bit on the higher side, even though the price of sale is low. PE is 22.8, but they are Zacks number 1 rank. Those earnings estimates really shot up after this pretty solid quarter that they just reported. So that's another one to keep in your wheelhouse. Let's go over the tickers then on all of these. Walmart is WMT. Macys is just M. United Health Group is UNH. And Cisco, the non-tech company Cisco, is SYY. So there's just a few examples of how to use this very basic screen. Gave me some pretty good choices there. And like I said, there were a couple dozen other ones you could consider. So definitely, it's not bad to employ the basic screens. We also have some more advanced screens on Zacks.com, like predefined ones that throw in a lot more value metrics. But if you're just looking for just the basic value with the Zacks rank, I like to use the price to sales ratio versus the PE, because I feel like it gives a little bit more complete value picture. So be sure to check out all of our other articles on Zacks.com and check out our other podcasts, including the one on just how to, what is value and how to find it, because that's kind of the introductory podcast, and I think you'll get some good ideas there. So until next week, I'll see you then.
Listeners of today's program might have an interest in value stocks similar to those Tracy shared today. If you'd like access to her Value Investor Portfolio Service, which includes real-time buys and sells, market insights and commentary, visit www.zacks.com/valueinvestor or call toll-free 1-888-775-8348 between 10 a.m. and 6 p.m. Monday through Friday. Outside the U.S., call 1-312-265-9309. Again, that's www.zacks.com/valueinvestor or toll free 1-888-775-8348. Outside the U.S., 1-312-265-9309.